Well, let's get to the charts that matter right now. And for that, Tony Sycamore from IG is joining me to get us across what traders are watching. Tony, welcome.
Thank you. Great to be here.
You look at the performance of markets overnight and you would think that there was never an AI bubble wobble, would you?
No, well, that's right. A third night of gains for US equity markets overnight. And I feel like at the end of last week, we saw an inflection point for a couple of things. Rate cut expectations. We started the week pricing in about 30% chance of a 25 basis point rate cut from the Fed in December. And also with regards to some of the technicals in US equity markets. Now, with regards to the Nasdaq, it had a look below that support band I've been watching for quite a few weeks now. 24,000. It pushed below there and then rebounded. And ever since then, it's pushed higher and higher. And I think that largely signifies, along with that shift in rate cut expectations, that the pullback in US equity markets is complete now and we can rally into year end. So there will still be some permutations and rock and rolling in the AI space, but overall, some of the negative news associated with NVIDIA has been overshadowed by Google and by Meta. So upwards and onwards, I think, for the Nasdaq into year end now.
Well, that's good news. I was chatting with a guest yesterday about crypto, though. He was saying, watch the tape, only trade the tape when it comes to Bitcoin, because the dip shouldn't be bought until we see some sort of a confirmation that the worm has turned. What's happening?
Well, I actually disagree. So I'm watching the tape, and one of the things that I see at Friday's low around that 80,000 area is capitulation. So the candle which formed there at that 80,000 low is generally a sign of indecision and potential reversal. It's also a sign of I think for me, a short-term low after Bitcoin decoupled from US equity indices and after that heavy sell-off that we saw from the October 10, when tariffs got threatened to be raised on China by 100%, and it just cascaded lower from there. I think a lot of the leverage selling is now done. I'm not calling a rebound back up towards that 126,000 high, but in the very short term, I guess over weeks, I could see Bitcoin getting back up towards 95,000 without too many difficulties here. And that's providing it holds that 80,000 low. Now, that 80,000 low is also being reinforced by the Liberation Day low around 74,000. So a very good band of support there for me. And I suspect that leaning against that, we can probably grind a little bit higher into year end as well.
All right. So that is a differing opinion. And I like
it
when the
markets.
charts are backing it up. Yeah. All right. Crude oil, though, really suffering, was down again in the overnight. And that was while we saw most asset classes rising. I mean, arguably, if there's going to be a rate cut, we'll see increased demand for oil, at least in North America.
In theory, yes. But of course, the thing driving crude oil markets last night was that positive development around Ukraine close to accepting the peace deal there. And what that will do is it will, if the deal is signed off or agreed upon, it will unlock a lot of Russian supply. And I've been thinking that crude oil probably is basing against the year-to-date lows around $55. But the amount of supply which has been locked up by sanctions, which will be unlocked, I suspect probably would push it below $55. And in that respect, I would probably move to a neutral basis. You know, it's out of our hands now. It's whether Ukraine, Russia, the US and Europe can hopefully come to an agreement. Not good for the bullish crude oil call, but good for, I think, peace and other things as well.
Oh, yeah. Look, peace is what we're after, right? We have that inflation read I pointed out at 11:30. How influential do you think that might be when it comes to the Aussie?
Well, I think the Aussie is trying to base as well. Other risk assets, as we've mentioned, have based, I think. But the Aussie's still just got a little bit of work to do. It's sitting around the 200-day moving average, which is the orange line. It's held that band of horizontal support around 64.20, which has held for the past 3 or 4 months. But it just needs to get above that, I guess, the broken trend channel, which you can see there on the chart, coming in around 64.75. And if it can do that, I suspect the inflation numbers will be on the firmer side of things. But when we look at what we're comparing with, this new inflation number, as you mentioned, we're comparing apples with oranges, whether you look at the quarterly or the monthly numbers, which we had previously. So I'm not sure the market's going to get too carried away with this number, but at the margin, a warmer number. And that should, I believe, help the Aussie along with the increase in rate cut expectations for the Fed in December.
Because we're getting this divergence between central banks.
Correct.
Now, when it comes to the Aussie, do you have any sort of a year-end target? Do you do it in that manner or not?
Well, I'm going to the US on December the 30th,
Yeah.
so I'm going to say 70 cents. But realistically, probably I feel like it's been very comfortable around 65.50, trading 100 pips either side of that. So I'm going to go for the safe option and say 65.50.
Yeah, all right. We all wish that when we're going to the States, the Aussie would be a bit stronger. I was chatting with a friend yesterday, and she was saying it's the incidentals that cost a lot when you go to America, and one of which is, the exchange rate.
That's
Killed
right.
me last year. All right. So what does all of this mean, you think, for the S&P ASX 200?
Well, I feel similar to the way I feel with regards to the S&P and the Nasdaq. I think Monday's sell-off, or rebound rather, after Friday's very heavy sell-off probably indicates we've got a short-term, potentially a medium-term place in at that low we saw on Friday. So it has been about a 7.5% pullback. It probably created a little bit of a head fake there when it did break below the 200-day moving average. That was my target for this move. But by and large, providing we can hold above that 83, 82 low, which we saw on Friday, I feel there's good upside towards at least 87.30, which is a band of horizontal resistance. And I just wouldn't want to be backing against equity markets at this time of the year as well. After Thanksgiving, the seasonals start to turn quite bullish across all equity markets. You've got that playing out. You've got potentially, we've already had a nice pullback in a lot of these markets. So I would be leaning against that 83, 82 low, looking for higher prices into year end.